Today, we're diving into what unfolded with SoFi, analyzing key data points and important details you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi closed slightly in the red today, down 0.95%, with 38.7 million shares traded against an average of 43.7 million. This unexpected drop was largely due to heavy institutional selling early in the day, though the exact reasons behind this sell-off remain unclear. Interestingly, there were no new SEC filings or breaking news that could explain this, although the FOMC meeting minutes released later in the day did provide some insights that could impact SoFi's stock price, both positively and negatively. On the positive side, the FOMC minutes hinted at a consensus for a potential rate cut in July, raising the likelihood of a 50 basis point cut during the September 18th meeting to 36.5%. This was up from the 22 to 25% likelihood just a day earlier. There's also speculation of a follow-up 25 basis point cut on November 7th. This made the market slightly more optimistic about SoFi's future. However, Powell also expressed concerns over regional banks, which could be seen as a mixed signal for SoFi, given its ties to the banking sector. Early in the day, we saw a lot of institutional selling, followed by shorts returning shares. Specifically, shorts returned a net 430,000 shares, bringing the percentage of the free float being shorted to 17.27%, which equates to about 180.79 million shares overall. The cost to borrow average spiked to 1%, a level it hasn't reached in some time, while utilization stood at 56.65% and the short score was 72.57. This raises more questions than answers, as the return of shorted shares typically adds buying pressure, yet the heavy institutional selling counteracted this. Recent 13F filings showed that many institutions increased their holdings in Q2. So the selling today might be due to last-minute jitters or other underlying concerns. The technicals still show some optimism for SoFi. Despite some chatter suggesting SoFi might drop significantly, the charts don't support a drastic decline in the near future. Shorts returned around 430,000 shares, which contributed to some buying pressure, but they weren't particularly active overall today. Looking at options activity, there was $3.36 million in call options and $1.47 million in puts, with 47% of today's options activity leaning bullish. Among the call options purchased, there was a consensus that SoFi could climb above $8 by the end of next week. The open interest for calls at the $7 and $7.50 strike prices were 31,000 and 30,000, respectively, suggesting a potential range-bound movement for SoFi between these points. SoFi seems to be stuck in limbo, with significant transactions occurring in the dark pool. Notably, there was a 10.4 million trade and another for 2 million shares, although the dark pool doesn't provide the bid and ask prices, keeping some details in the shadows. As SoFi closed at $7.30, it's currently trading between the support at $7.23 and resistance at $7.46. SoFi did dip as low as $7.13 today, which seems excessive given the circumstances, but the next strong resistance level at $7.46 could prove challenging to break. If SoFi continues to trade in this range, it might struggle to push past $7.50, which is heavily influenced by options activity. SoFi often experiences sudden bursts of momentum, only to see it quickly fade as institutions seem to exert significant control over its price movements. This can be frustrating for investors, as the stock shows potential, only to lose steam just as quickly. We'll have to wait and see if SoFi can maintain its momentum, or if it will be pushed down to its 100-day moving average near the $7 mark. The stochastic indicator is currently at 78, indicating that SoFi could be overbought if it continues on this path. Any sign of weakness, either in SoFi specifically or the broader market, could lead to a pullback. Despite this, the bigger picture still looks relatively healthy for SoFi, though the consolidation period can be disheartening. With more retail investors getting involved in SoFi, it's clear that there's still interest, but the stock remains at the mercy of institutional moves and short-selling strategies. Friends, that's all we have for you today. What is your opinion about today's video?
Get involved and let us know in the comments down below.
Thanks for watching.